Hello, ladies and gentlemen. Nice to see you guys today. Also, here's one thing as well. This video may be a bit long. Also, I will not be available Friday because I have things going on Friday that need to be taken back. So, or be doing some good stuff there. So, I won't be there on Friday. But this video may be a bit long because I need to go over all this information with you guys of what's going on in our country and our banks, because right now what we're seeing here is some major issues, and we need to go over it. So without further ado, without making this video too long that it is, we're gonna go with this. Okay, so we have Silicon Valley Bank placed under U.S. government control following collapse. This is the second largest bank failure since Washington Mutual in 2008. Silicon Valley Bank is the 16th largest bank in the nation, with roughly $209 billion in total assets and $175 billion in deposits as of December 2022. It was closed by the California Department of Financial Protection and Innovation on March 10th. All the deposits have made to the SVB are transferred to a new bank, the Deposit Insurance National Bank of Santa Clara, created by the Federal Deposit Insurance FDIC, which is the bank's current deposit total was undetermined. The FDIC as a receiver will retain all the assets from the Silicon Valley Bank for related deposition. Loan customers should continue to make their payments as usual. Deposits are only insured up to $250,000. The FDIC says those with the uninsured deposits will receive an advance dividend by March 13th. Normal banking hours and online services are also set to resume on March 13th. The FDIC noted the last bank it insured that closed was the Alameda State Bank in Alameda, Kansas on October 23 to 2020. Based in Santa Clara, California, the SVB had 17 branches in California and Massachusetts. The bank was founded on October 17, 1983. The institution gained popularity in the tech industry as it was willing to work with startups despite their inherent risk. On March 9th, shares of SVB dipped by 60%. Shares continued to fall the following morning until sales were ultimately halted. There are recent developments that concern a few banks that are monitoring very carefully, and when banks experience financial loss, it is and should be a matter of concern. Treasury Secretary Janet Yellen told members of the House of Representatives on Friday per ABC News. According to Bloomberg News, the San Francisco-based venture capital fund, which was founded by Peter Thiel, had advised companies to pull their money from the SVB on March 9th. The founders funded concerns about the bank's financial stability. For some people that may not know what day it is, because Mondays are always the dreadful ones. It is the 13th, so the March 9th would have been, I may believe, around Thursday to Friday. It would it would have been Thursday. So the banks started collapsing essentially around close to the weekend. So it's not going too great here. On the same day, Chief Executive Officer of SVB, Greg Becker, asked his clients to stay calm on a conference call. The bank, which was in liquidity crisis, had been scrubbing short finances, reports MarketWatch. On Wednesday, Silicon Valley Bank said it had taken strategic actions to strengthen its financial position, which included a $20 billion sale of a securities portfolio at a loss of $1.8 billion. SVB's failure has shocked the technology sector, with some analysis predicting additional financial turbulence in the near future. No bank understands startups and the tech the way they do, said Antoine Navarre, co-founder and general partner at Bank Ventures. They have a 40-year reputation earned the hard way, built on the most extensive network of insider relations with Silicon Valley's most important players. So yeah, that's what's going on in Silicon Valley. It actually legitimately collapsed. And with that, we have these issues and what have you. We have this as well, that we have the non-tech startups were also grappling. This is from the Silicon Valley banks. The first thing you can think about is survival, he said. It is a harrowing moment for a lot of people. Non-tech startups are also grappling with the fallout. Vox Media, the publisher of a New York magazine, and The Verge, has a substantial concentration of cash at Silicon Valley Bank. A person briefed on the company's holdings said the company's credit cards, which Silicon Bank issued, stopped working on Friday. So, yeah, that's not going good either. So, and then we have this. Now, this is a failure of complete wokeness. I'm not going to go through the full article. This is another article that explains kind of what's going on. I will be placing all this stuff, from the tweets down to all the stuff that I have, to you guys, so you guys can see exactly what's going on. With the lies and with what they're trying to paint a certain someone that you know, which we'll go over, that what they're trying to do, which is completely insanity. So we have SVB had no head of risk assessment for 9 months before it collapsed. As a woke boss for Europe, Middle East, and Africa was busy organizing a month-long pride campaign and a lesbian visibility day. This is the reason why it means when we get diversity hires. That says, while Silicon Valley collapsed, talks are going to push woke programs. A head of risk management at Silicon Valley Bank spent considerable time spearheading multiple woke LGBTQ plus programs, including a safe space for coming out stories as the firm raced towards collapse. My apologies. Jared the boss of financial risk manager of SVB's UK branch, launched initiatives such as the company's first month-long Pride campaign and a new blog emphasizing mental awareness of LGBTQ plus youth. The phrase, "you can't be what you can't see," resonates with me, Espera was quoted as saying on the company website. As a queer person of color and a first-generation immigrant from a working-class background, there was not many role models for me to see growing up. Her efforts as the company's European LGBTQ employee resource group co-chair earned her a spot on SVB's outstanding LGBTQ plus role model list in 2022. A list shared in a company post just 4 months before the bank was shut down by federal authorities over liquidity fears. So it goes on to say, in addition to the initiating SVB's first safe space catch-up, which encouraged employees to share their coming out stories, and serving on LGBTQ plus panels around the world, Espera spent over the last year serving as director for diversity role models and volunteering as a mentor for migrant leaders. I feel privileged to co-chair the LGBTQ plus ERG and help spread awareness of lived queer experiences, partner with charitable organizations, and above all, create a sense of community for our LGBT plus communities, employees, and allies. Episodes couldn't immediately be reached for comment. SVB was abruptly shut down Friday by the California Department of Financial Protection and Innovation shortly after the bank disclosed it had taken a $1.8 billion hit from $21 billion fire sale of its bond holdings. It faced a crunch due to surging interest rates, and a recent meltdown in the tech sector led many customers to spare their deposits. Shares of SVB Financial, the bank's parent, had to plunge by a whopping 60% on Thursday. The stock was down another 60% in pre-market trading Friday unit until being halted. On Saturday, Home Depot co-founder Bernie Marcus intuited that woke policies like the ones launched by Espera could have led to SVB's dramatic failure, which we all know it did. I feel bad for all these people that lost all their money in this woke bank. You know, it was more distressing to hear that the bank officials sold off their stock before this happened. It's depressing to me. And who knows whether the Justice Department who would go after them. They're a woke company, so I guess not. And they'll probably get away with it. The businessmen blame the Biden administration for pushing companies and banks to consider global warming over shareholder returns, resulting in catastrophic economic pitfalls. These banks are badly run because everybody's focused on diversity and all the woke issues and not concerning on one thing they should, which is shareholder returns, Marcus said. Instead of protecting the shareholders and their employees, they were more concerned about the social policies, and I think it's probably a badly run bank. They've been out there for a lot of years. It's pathetic that so many people lost money that won't get it back. The impact of SVB's collapse is not entirely clear, but experts theorize it could impact the future of regional and mid-sized banks across the county. While the clients frantically pulled their money from SVB after it collapsed and rushed to put in large banks like JP Morgan or Bank of America. SVB's collapse could predict an engine innovation. Others claim SVB was known for backing startups, leaving a hole that other banks may not rush to fill. So, yeah, of course, we have very woke things that led to the collapse of Silicon Valley Bank. I'm not really surprised with this, because everything woke goes to die, and we want to think that this is okay. So, by the way, all the people, all the celebrities, all the people, and very woke people, when you put it into SVB because they're all woke, you have now suffered the consequences of your actions by becoming woke instead of actually doing on reality. Reality is going to slap you in the face, more than it just has. So, yeah, woke policies possibly was a great reason why the Silicon Valley Bank collapsed. On top of this, Signature Bank becomes the next casualty of banking turmoil after SVB. This is another bank, guys, and I'm going to show you on how bad it is. This is the tipping block. This has only happened since this started on Wednesday. We heard something about the SVB collapsing. And then it all came to a full hold on Friday for the SVB. And now, over the weekend, the more banks are collapsing. This is not a joke. This is bad. And Biden wants to come out here and say the economy is good, it's great. Well, it's not. It's not great. We've been saying it's not great for the past couple of years now, and you've been lying to the American people. So yeah, Federal Deposit Insurance Corporation took control of Signature, which had 136 billion in assets and 89.9 billion in deposits at the end of last year, according to New York State's Department of Financial Services. All depositors of Signature Bank in Silicon Valley will be made whole, and no losses will be borne by taxpayers, the U.S. Treasury Department, and other bank regulators said in a joint statement. So yeah, it's not going the good here. And we have this from Thomas Massey. Just got off a Zoom meeting with Fed, Treasury, FTC, House, and Senate. A Democratic senator essentially asked whether there was a program in place to censor information on social media that could lead to a run on the banks. So now they're trying to want to censor this stuff for all the stuff that's going on with the banks right now because it makes the bad information look bad. This is what a dictatorship does, guys. This is what, when things are going bad and makes them in a bad light, they have to censor information so that everything that makes them be good. This is what dictatorship / communism, fascism is. All right, at its full board. This is what we're seeing here because the banks collapsing and all this stuff is not good. All right, it's not. It does not look good for the administration. And then again from Thomas Massey, understand what's happening at FDIC. They're taking the insurance premiums that were paid in to protect depositors on the 250,000 little guys. It's using to cover deposits of the very rich. They argue it benefits everyone to go all in on the first new banks. So yeah. So the very rich gets the ups, and us, the American people that are struggling to live, struggling to get by, are the ones that are going to take the beating. We're going to be beaten into submission. We're going to be left out to the dust, while the very rich, the elite, get all the money. See where we're going with this? We have more. The Coalesced letter says the 2-year Treasury yield is now tracked for one of its biggest 2-day drops in history. The yield is down over 100 basis points from its high last week. Bond markets are moving quicker than what we saw in 2008. Bonds think the system just collapsed. This is what we're seeing here. This is not good. It is down horrendously. Then we have more from Bill Ackman, which is saying everything's going to be fine. He says, our economy will not function effectively without our community and regional banking system. Therefore, the FDIC government needs to explicitly guarantee all deposits now. Ours matter. We also need a modern version of a deposit insurance regime, but that will take some time, and that's okay as long as all deposits are guaranteed in the interim. Regional banks or stocks are an incredible bargain as long as the government does the right thing, and I'm confident it will. It will not do the right thing. It hasn't been doing the right thing in the past three fucking years, alright? They have been failing for 3 years. In fact, they've been telling us for the past 3 years that the economy was fine, we're not under a recession, and look what's happening to the banks. These people are lying to you. They're trying to say everything is okay and nothing will not be bad. But it's wrong. These people have lied for the past 3 years. I mean, they've been lying for their whole lives, but they've been lying this entire time. Do not feel complacent. Do not listen to what Bill Ackman says. Not at all. Do not listen to him. At all. It is not what he's saying it is. This is not without real risk, but it does offer very attractive asymmetry. I will be surprised if Warren isn't putting capital to work in his favorite regional banks now. Unfortunately, I won't be able to participate as we decided that we wouldn't invest long or short in banks, as we want to continue to be part of this conversation and be able to share my views without the typical accusation against investors who share their views while having traded on. So, yeah. So, this guy is also getting blasted. Because people are knowing what's going on. I think either California or the Treasury Department should backstop Silicon Valley Bank. This is from Andrew Yang. Thousands of companies will fold or lay off people next week because of the lack of access to accounts through no fault of their own. Take the equity and fire the managers. But SVB's clients, many biotech, are important for national innovation and competitiveness. You need to instill trust and reduce financial condition can panic further runs. So yeah, that's what's going on here with Andrew Yang. With all this stuff. With Natalie here, I don't know how to pronounce her last name, so I will not try to do so. The Fed bailing out banks means printing money. Printing money means inflation. Inflation means it hits you, which means you're the one bailing out the banks. It's a bailout, and you get the bill. Yeah, so they're again, as I said, they're letting the little man pay for everything. What says Biden inherited inflation. We're going to be going over this, by the way, because this is a complete fallacy. No, it's not Peter Thiel or President Trump who's to blame for bank runs and SVB collapsing. It's because of Biden inflation forcing the Fed to raise interest rates. Our banking system is not designed to withstand the massive rate hike we have seen under this regime. Yes, so again, this is not true, because we all know we've gone over this, right? SVB is collapsing. Well, we all know it's from woke programs and stuff like that, like this. They have actively done this in a sense for all their woke BS. So we know that's not true. So obviously we have the growth here with the administration and stuff like that. With greater productivity is one of the two main drivers of growth from Trump stuff. So we'll be going over this a little bit later. But right now, we need to see exactly what's going on with this. So we have halted stocks alert. Bank stocks, SVB, FRC, PAC, WW, WAL, SBNY, and face trading halts. These things are bad. It is not looking good here. And then we have this. This is from NASDAQ Bank. All these are down. This here, this is the only one that seems to be going up. But look at this. This is red. This is devil's work. This is blood. This is not good. Some of these banks, yeah, they're green. Some of them are green. But 80 to 90% of these banks are all red. They're all red. This is horrendous, guys. This is what I'm talking about. This is not this is not a joking matter. Then we have here, there's going to be more. How Washington is bracing for a bank fallout. This is happening here again. So in the next week, maybe or so, there'll be more banks that are going to be collapsing. So what we have here is we have record economic optimism under Trump and better than Reagan, Clinton, and Obama. So this is what we're going to go here with all this stuff, right? So we were saying how Trump and what have you and whatnot, they're blaming Trump. Again, of course, as I always said, I always do, that is part of the problem. No, we're going to debunk that right now. So we have greater productivity is one of the two main drivers of growth. The other is an increase in number of the U.S. workers. Both have slowed in the past decade. Economic growth has 2.3% in 2019, matching the average pace since the Great Recession ended a decade ago in the first year of Barack Obama's 8-year presidency. During 2016, Trump boasted that his tax cut plan would boost annual growth to 4% a year, a brisk pace not seen since the late 1990s. So, yeah, that's what's been going on there. So we have this. Again, we have this Biden to address nation on bank failures, vows to hold those responsible fully accountable. And the ones fully accountable is you, Biden. So you have to hold yourself accountable. The woke people are the ones that did this and what have you. So I don't know what we're really going with this. Fully accountable, my ass. You're the part of the reason why. So again, what we have here is that this is going to show exactly what's been going on with the stuff. This says Trump economy roared in February, lowest employment in over 50 years. And so what that pretty much means is that what we have here is that the CNBC noticed January and February gains tied for best month since May 8, 2018. Economists surveyed of both Dow Jones have been looking for payroll growth of 77,000 and 3.5 jobless level. Not only was February cause for cheering, the previous 2 months were even better and they have been summarized. As the number of jobs added in December was re-estimated from 147,000 to 184,000, and January soared from 225,000 to 273,000. Average hourly earnings grew by 3% over the past year. Various sectors of the economy reported great gains in February. Health care and social assistance up to 57,000 jobs. Food services and drinking places up to 50,000 apiece. Government employment up to 45,000. Construction up to 42,000. Professional and technical services up to 32,000. And finance up to 26,000. So all this stuff is up. This is from the Trump era, okay? And then we have this family income rose drastically under Trump, meaning his economy was better than Obama's. And then we have here record economic optimism under Trump, better than Reagan, Clinton, and Obama. And what we see here, guys, is that this is in 10 Americans, they say they're better off financially than they were a year ago. And look, all this stuff from 96, this is from 76, all the way to 2020, and this is all the way up, down to 02, and then we have this, and it's just rising. Because remember, 16, this is 2016 right here, and it's rising, and rising. President Donald Trump has the highest Gallup approval rating for economic management since 9/11. Impeach not. Trump approval highest yet. Half say he deserves re-election. So, yeah, they're lying. And the fact of the matter is that the reality is that these banks are collapsing. We're in a serious problem. The Biden administration has been lying to everybody, saying it's been all fine when it's not. And this is the reality that we have to live in, guys. The dark ability to where we're at risk. All our banks are not doing great. And we're probably going to see more banks fail. We're probably going to see more issues come along the line, and we need to brace ourselves. I'm letting you guys know exactly what's going to go on. I'll leave all this stuff down for you guys to read and proofread for yourselves, because the insanity is here, the reality is hitting, and the recession is going to be massive. We said that it was going to happen this year, and it's not a joke. I guess you should start listening to us more, huh, leftists? Because right now, you're being played a fool. Alright guys, that's it for the video. Like, subscribe, share. As always, take care.